Ryan Ray and Ben Samuels present Bring In the Closers, a podcast on making deals and doing business.
Welcome to another edition of Bring In the Closers. Ryan Ray alongside a Cat and Ben Samuels. Cat, how's it going today? Ben Samuels? How are you doing today, sir?
I'm doing well. I mean, I was half joking over the, when we got on the podcast, and I said that how can you not be in a good mood? I mean, the markets are going up. Good things are happening worldwide. There's nothing to indicate that we're in a downturn at all. Whether or not any of that's accurate is a whole different conversation. If you do believe that, though, I also have some oceanfront property in Arizona to sell you. So I mean, we could.
The Dow's up 3% today. The Nasdaq up almost 3. Dow's up 3.64. Nasdaq's up almost 3. Alphabet, which is Google's up over 2, and Apple's up 7%.
Almost recovered from last week. Last week was brutal. Oh my God.
Yeah, I mean it was like 30,000 points, or I don't know. It was something crazy. It's like, oh my gosh. So, which brings us to this podcast episode, the most important podcast episode we've ever done. And I wish we could play the Joe Biden clip. Can you hear that? He can't hear that, can he? Anyway, I want to be able to play, Nate. I want to be able to play. Is oil and gas dead? Long live oil and gas. Is oil and gas dead? Is it dead? Ben Samuels, yes or no, is oil and gas dead?
See,
he couldn't do it. He couldn't do it. It was a yes or no. It was yes or no.
No.
Okay. All right. Well, I don't think so either. So that's it for this episode. We'll be back next week, Ben.
And okay. I was short and sweet. I appreciate that. That's man. How efficient is that? Just yes or no. Let's go.
Let's go. I mean, they came for the facts.
Episode.
If you want to hear us ramble on, you can. But if you wanted to know that answer, there it is. We put it in the head. We put it. Is oil and gas dead? If you want to hear us ramble for whatever it is, Nate's looking like I'm crazy. Nate, what, Nate?
You said they came here for the facts. Our listeners don't come here for the facts.
That's true. That's a good point.
They come here for the story.
That's true. So if you came here for the facts, you're new to the show, and you don't realize what this show's about.
Yeah.
For the rest of you, we'll now just spew things that we don't really believe in hopes of.
That's actually not a bad idea. I think from now on, we should just do like a yes or no, couple of questions at the very beginning to talk about what we're going to do for the next 50 minutes. And so if you don't have the 50 minutes, you can just get what Ryan wants to say, yes or no, good, bad, or indifferent, and just move on.
Hit me. I'm ready. I'm ready. Ask me anything. Kind of.
I mean, because I've noticed when you play the podcast on 2 or 2x or 2.5x, I mean, obviously I come through cleanly and it sounds great.
Not me.
But a lot of times you just sound jumbled. Yeah. And so if we can help the listeners out a little bit.
I talk too fast.
You just have too much knowledge. You just have too much knowledge up there that you're trying to get out in a short amount of time, and so it just comes out.
Yes.
It comes out quick.
Thank you for acknowledging that. That's important. I'm slowing it down. This is me at 6 speed. I'm really slow right now, so. Trying to allow folks to listen to me on 2 speed. I know that's a problem. You're not the only one who has ever mentioned that to me. Thank you, Ben, for bringing that to my attention.
You are welcome.
No, so you don't slow down. I'm slowing down to try to be normal.
Oh, yeah, because I already talk slowly enough. Is that what you're getting at? Or okay.
I mean, by your own admission.
Actually, no, the opposite. But don't let the facts.
Whatever. Not the facts. Did he not just say? Did we not just record him saying that he sounds good at 2 and 2.5 speed, and I sound jumbled? Did he not just say that a minute ago?
He said that he sounds clear. Yep.
Okay. So I don't know. Don't let the facts get in the way of the facts. But okay, sure, whatever. Ben, yes or no?
I can just articulate. It's okay. It doesn't matter.
You got 16 college degrees, so cool. Good for you.
Just one.
I thought you went to 2 different colleges. You went to Boston, and then you went to Colorado.
The post VA doesn't count. That's more of a certificate. That's
okay.
Okay. But thank you. I appreciate that. No masters. I've been trying to get you to take some courses with me through Harvard or MIT or Rice, but you're just too busy. So I guess I'm gonna.
It's hard to. It's really hard to say. Should I meet with an ambassador or take a course with Ben? It's a toss up. I think about it often, but so far the ambassadors have won.
Well. But no, the question really is, should I eat out at Burger King 10 times a week, or should I go do a course online? I mean, it's not the ambassador thing. You're assigning the wrong values, but again, neither here nor there, not important.
So you're saying if I had Burger King less than 10 times a week, I could still meet with the ambassadors and do the course with you?
I mean, if you were more efficient with your time, yeah, you probably could. Can we end the podcast there? Can we just can I just sign off? And just,
So are you guys going to actually talk about something today?
I don't think so at this point. This is us. We have a truce, so we're trying to. This is us gentle.
I'm pretty sure the truce is broken.
No, I haven't said a mean thing.
No, the truce is definitely dead. He just hasn't admitted it yet, but that's neither here nor there. So Ryan, you did mention, is oil and gas dead? I'm curious, we've seen this cycle time and time again, right? Different market movers, different reasons that the market has come down, different loss leaders, etc. But from a firm that is focused on, you're an oil field service company, with R Squared, in terms of the lion's share of your business is focused on new production and things happening out in the field. As a business owner, in this market, what are some of the things that you're looking at? How are you, kind of internally addressing the issues that we're looking at on a day-to-day basis, and kind of trying to plan for the next 10 months or what have you?
Yeah, well, the problem is, I was really optimistic about the price of oil the second half of the year, and so you look at that and say, okay, we want to be in with the upstream companies because the second half of the year you think they're going to do well. And right now you're going, okay, well, the coronavirus has kind of, knocked that in the head. For us, what we try to do is to balance between upstream and midstream companies, because the life cycle of those projects, the start and stop, when they come on, those are at different times. And so we try to balance ourselves out between those, and then try to balance ourselves out with the size of companies. So larger E&Ps, smaller E&Ps, larger midstream, smaller midstream. We're a little bit more diverse on the upstream side than we are on the midstream side. We have some good midstream clients, but our diversity is a little bit more on our upstream side. The benefit is for us is that we don't need a lot of clients to keep us busy. So we're not like, if you think of someone like Walmart, where they have to have, store to store producing, a certain volume. We don't have to have that. So the flip side is, so that's the pro. The con of that is that one client goes down, that's a major portion of your business. So that's kind of the pro and the con there. That's kind of the line that we walk. And so
are you finding? Go ahead.
I would say so. We try to figure out, okay, and it's not. And the final thing I say is it's not as easy as saying, well, we want to pick up 3 more midstream clients, and so we can just go do that. We actually, it's a process. It takes time. It's hard to do. So you kind of have to hit both, try to pick up both, and just hope that the balance is. You're like, okay, hey, we got a little bit too much upstream. Let's try to focus on midstream. But you're like, okay, we still want to. We can get clients on upstream. Then we can't turn that down. So you kind of find yourself in a spot to where it's not as easy as just saying, hey, we want to go out and do this. It's trying to do 2 things at once and balance it.
So that's a great lead into my next question. I was curious if you can talk about a little bit. There may be a lot of listeners that aren't even really familiar with the process, and so if you want to give maybe a 30,000 aerial foot view of just kind of generalities, that might be helpful to kind of frame it. But I was curious, obviously a lot of your work, or maybe all of your work with R Squared, focuses on and is contingent on having certain MSAs in place with different groups. So I think that's kind of a double-edged sword, in the sense that, like you were talking about, you already have established business, established clients. And so, do you find that because you're on an MSA list with a firm, they're maybe less likely to cut you and cut the work? Because if they were to cut you off of that and then maybe want to reapproach, they would either need to go through that process with a different firm of getting the MSA in place, or kind of how does that work? And then kind of part B to that question is, are you finding that these firms that, that the midstream, sort of the service companies like you guys, are you finding that right now your clients are coming back to you and looking for, cost cutting or looking to renegotiate, or kind of walk me through some of kind of what's happening on a day-to-day, in this kind of market?
Yeah, we have had one client who has called and said, hey, while the price is in this range, we are going to have to reduce cost. And so, and that's better than saying, hey, we can't use you anymore. And so, so we weren't walking around high-fiving, but we were also like, okay, well, if that's, we can manage, and it's going to, be tough, but it's not the end of the world. As far as the MSA question goes, that's really going to be, so think about it like this. If a company doesn't want to use us anymore, they could fire us and cancel our MSA. That's the exception, not the rule. Usually they just won't use you anymore, but they'll keep you in the process. And so if you think of a company like Kinder Morgan, they have as many MSAs as they want. And so what will happen is they'll cut some of them out over time because they're inactive. But the MSAs that they will have will be companies like ours, which are smaller, all the way to our largest competitors. And so all of those companies So if you get rid of R Square Global, but you need someone to step in, you could find another company like our size, or you go to one of our large competitors who's already working for them and say, hey, we need you to pick up the slack. So Kinder Morgan, and again, I don't remember what their MSA process is like, but they might have an onerous MSA process. We go to a small producer that's doing work like Ben Samuels EMP. He might not have but one or two companies like myself out there working for him, but his process to get you approved is really easy because it's a small company. So they may have less MSAs, but to go through the process is going to be a lot. Their risk mitigation is not the same as what Kinder Morgan's is. So that's kind of how it works. That's kind of your when you're looking at that, you're going, okay. And what we've seen is usually, unless you've made a terrible mistake, usually they're going to phase you out over the course of a project. Okay, hey, we're doing this. Like on a pipeline project, it might be, well, you did preliminary, but you know what? We're not going to use you for construction secondary as built, even though that would normally go to the same vendor. Sometimes it means something, sometimes it doesn't. But if they're going to phase you out, they might phase you out there, or at the end of that project. If it's a well-staken job, they might say, hey, we're gonna get this next well staking package over to Ben Samuels and his group, and so they start phasing you out nice and slowly because there are certain things that they have to weigh on their side. So if you're out there staking wells for someone in New Mexico and you're behind, you could cost them the permitting. You get the permits done in time. So so they had to kind of treat their vendors. They're going to get rid of them in a certain way because the vendors could really hold them up on whatever projects they have. And so, but that's usually how we see it done. So with the smaller companies, they can go get someone a lot quicker because they may not have a lot of MSAs, but they can bring them in, get them done. The bigger companies, they have those companies that you're competing with. Maybe not on, if I'm working for Ben Samuels, I might not be competing with another client for another vendor for Ben Samuels because he's using us exclusively. But he just walks across the cubicle and goes, "Hey, I need to do a survey company," and then that guy's got a guy or a girl or whatever. So that's kind of how it works from that perspective.
How common is it to find relationships where you may not be on the MSA list of a certain firm, but a firm that does similar work to you guys is on that MSA list, and they may be full up, and so they kind of third party contract to you? I mean, do things like that happen, or is it you got to be on the MSA list to get the work, and you really can't do a workaround?
Yeah. Usually the MSAs require that if you're going to use a subcontractor, the subcontractor has to have the same insurance requirements. Okay. And so we've looked at doing some sub stuff. We've been asked before, and we've looked at it. The problem is usually the rates just don't work. The rates just don't work. What we want, so we're going to send our guys to work for Ben. Ben wants to make some money off those guys because he got the client. So he's got to mark it up or ask us to take a hit. Well, we're taking a hit, and then we're also exposing our guys to Ben, who Ben might try to hire away from us or something like that. And so it does happen, but there are some groups that are more just contract crew type groups, and that's all they do is kind of go around as a, 2 or 3 guys here, 2 or 3 guys there, and they'll go work for Ben, and they'll go work for me or whatever. You do see that on some level, but no, it does happen. You will see maybe the more norm will be is, a SAM or a Universal. I don't know, one of those big large companies. They'll get a project that requires 50 crews overnight, and so they might then want to bring in someone. But that's more of the norm than anything else.
Gotcha. No, that makes sense.
Because not having the crews is part of it, but you also have to have the drafting capacity as well.
You also have to have what? I'm sorry.
The drafting capacity.
Oh yeah, absolutely. Okay. Yeah, that makes a lot of sense. I think I have a follow up. You answered those questions so eloquently. I think I'll pass the buck on to you. What's on your mind?
Well, back to what we started with: is the oil and gas industry dead? It's up and down, up and down. Is this time different? One thing on the Texas Oil and Gas podcast we talked about was this GPA mindset. You as a college graduate with 3 degrees, this better than anyone else, is that you might have a good semester or a good quarter, but then you get an F on a midterm or whatever, and you finish out the rest of the year and you have good grades, but that low F really hurts you. You couldn't get your GPA back up to an A or 2.0 or whatever. Be 4.0, whatever. 2.0 would be me. You'd be 4.0. So if you look at the last downturn, there's still companies who have never fully reinvented themselves. They've not made that transition from, okay, hey, we're going to roll out drilling expansion to we're going to pay dividends and we're going to pay returns to our investors. So do you think now if we had a 6 to 8 month low price, what I'm calling below 50, low price environment, how bad do you think it's going to be?
I mean, it's about to get really bad for a lot of groups. Depending on who you listen to and depending on what market you're looking at, there's tens of billions of dollars of private equity money and Wall Street backed money that I think is going to leave the space altogether. Not going to be like Chapter 11 and restructure. I mean, leave the space altogether. And so I think there's going to be a lot of opportunity for the guys that are, in the groups that are well capitalized and have been sitting on the sidelines, kind of waiting for the opportunity to buy, because something that we've been talking about or have talked about on the podcast previously is that so looking at minerals for a second, just to give you a clean example, the seller's appetite, mineral seller owner's appetite to sell their minerals at what I would consider market value, comparative to a buyer's appetite to buy assets at market value, has become so wide and has been for such a long time that those deals have become harder and harder to make happen. And one of the reasons is because the seller has unrealistic expectations, because they remember the days that oil was at $130 a barrel and they think that's going to come back. And so they're pricing, kind of what they want to sell at based on top of the market. Whereas buyers are obviously looking to spend pennies on the dollar. And when you have that divide, and that's the same, with if you're looking at drilling prospects, what it costs to drill a well versus preferred IRR, right? And I mean, so you can look at this in any different market, but I think that the cost of capital and the metrics that either mineral buyers or operators or landowners use to calculate these deals has become so wide that you're really in a space where, until the market adjusts back to a normal level or kind of comes back to reality, it's going to be bad out there. And I know that might be a little bit confusing, but so let me say it in a different way. Right now, I think that what's happening at the end of the day is an incredibly healthy thing for the industry. It's ugly. It's crappy. If you're in the industry, it's not good. I'm sure both of us know multiple people that have been cut in the last 6 months or so. That's going to, that trend is going to continue. But I think what we're looking at is, rather than, and we've talked about it before, but rather than these operators focused on, and these mineral buyers focused on buying up positions and trying to just put a footprint on the map, I think the focus has turned into, how can we derive profit from our currently owned assets, which is a crazy notion, right? I mean, why in business would you want to get profit as opposed to just expand your footprint? I mean, we can talk about that at length. That's just insane to want to think about it that way.
But hold on. I got to push back on that. How much do you blame on the industry versus how much do you blame on Wall Street for incentivizing the industry to act that way?
So that's a great question. I think realistically, it's certainly, I don't think there's assigning blame on either side. I think it's like a 50-50 thing, in the sense that if you look at, apologies to anybody. I'm going to use a specific example, and I'm going to name names because I don't really care.
Ben Samuels. This is Ben Samuels, not Ryan Ray, because I don't know what he's about to say.
This is Ben Samuels saying this. I don't know who may be listening that came out of Halcon, but Halcon has restructured, I think, 2 or 3 times in the last 6 or 7 years. They've come out of Chapter 11. They have repeatedly raised substantive 9-figure funds, and then subsequently dive bombed those assets or those funds, in the sense that they bankrupted again. They just recently spun off into, I believe the firm is called Bellatorum. Bellatorum is managed by the same team that was managing Halcon, and they just like in the last 6 months, got a commitment for just under $1 billion. It's the same management team that has proven a number of times now that they don't know what they're doing, but yet they were still able to get funded because Wall Street, or because Halcon has this name and name cachet. So that, I don't know if you assign blame to the management team or to Wall Street, in the sense of what's the definition of insanity? Doing the same thing over and over again, expecting different results. I mean, so in answer to your question, I don't really know who's to blame here or kind of who's the loss leader. But there has been an intense focus on, once we, and the other thing is how to model these things out, right? And so, I mean, generally, if you're talking to Wall Street, the way they're going to pitch these things in terms of raising capital is, okay, operator X has this many wells in this area, and they don't take into account decline curves or anything that that the industry guys do. They just take into account where the acreage is. They find an EUR, they assign a value to that, and then they fund it based on that. but you and I know, and the guys in the industry know that there's so much more to the picture than just how many ducks I have or how many wells I can drill on an acreage. It comes down to how are you going to drill those wells? Are they good wells? Are you doing multiple stages? All these different things that Wall Street is completely blind to. And so I don't really know if there's a clean answer to that, but that was a lot there. But
I would say that if you look at the Halcon example, and I don't know all the particulars there, so this is me making up a hypothetical using that name. If the investors who are reinvesting in Halcon have all the facts to what has happened and they want to invest their money, then I have no problem. That's not on Halcon. That's on the investors. If Halcon is lying about why their investments went belly up, then that's on Halcon. So to me, it's pretty simple. As long as the information is being divulged, and I mean the information that's reasonable to be handed over. So, think about it like this. If I said, hey, Ben, I'm going to build an apartment complex, here are the risks. Okay, now list the 15th risk. And I didn't risk a tsunami coming from the Gulf of Mexico and hitting the apartment because I'm a long way from the Gulf of Mexico, or an asteroid, or something like that. I didn't list some kind of thing or the zombie apocalypse. Things that I guess you could list, but they're not really reasonable as long as what's being disclosed is go ahead.
No, I was going to say, I completely understand where you're coming from, but let me tweak it a little bit.
Yep.
Because at a high level, I think this is what's happening. Operator X is going to Wall Street and saying, hey, we have this much leasehold. We can drill this many wells. Here's what we want to do. Here's how much money we want to raise. Wall Street says, cool, here's the money. Here's the check. And then Operator X, what they do is rather than allocating those funds to what they had described, they go out and they acquire more leasehold. And so money.
Okay. But would you, so let's take the apartment complex. I said, hey, I'm going to build a 32-unit apartment complex in Granbury, and I need $5 billion. Would you have the contract written where I could spend the money on anything I want to? Or would you say, no, this has to goes right? So again, now, if they're being nefarious, I hate to be kind of wishy-washy, but I'm saying if that's if Wall Street is so smart and they tell us how damn smart they are all the time, then they shouldn't be writing contracts like that. And that's the thing. It's like, if you guys are geniuses, bring in a geologist, hire some guys who know the industry and have them look over these contracts. It's not that hard, guys. There is $2 trillion in dry powder of private equity money sitting around. This is not that hard if it's as simple as that. And that's how they paint it. But I can't believe that those folks are that stupid. And if they are that stupid, they should be fired from their limited partners the next time they go around a fund.
So taking it outside of oil and gas for a second, and I'm half joking when I say this, but what you and I need to do is we need to go pitch SoftBank on starting a mineral fund, because they're clearly okay with
whatever,
just like destroying billions of dollars. They don't care. And so if it's just as easy as, hey, I need $10 billion to
they had WeWork, right? That's WeWork, guys, right?
So many of them, but yeah,
okay.
WeWork is
so
one
if
of
you
them.
go read the stories, this is a great example. If you go read the stories about WeWork, and I don't know who had this, the Times or Bloomberg or whatever. If you go read the stories, the top bankers were hanging out with the dude that was the CEO of WeWork, and they were going to these parties, and there was girls, and there was booze, and there was a rock star lifestyle. That's Wall Street's problem, because Wall Street's guys were going out, and they kind of had an idea that maybe this wasn't that great. And listen, if you do your best and you screw up, you lose a bunch of money, then listen, I'm not happy about that. But with these situations, everyone likes to act like everyone from every side is doing their best, or one side's really bad and the other side, and that's rarely the case. Wall Street is supposed to be the most sophisticated investors in the world, and if they don't know how to invest in oil and gas, then get the hell out, because you don't whine to me about it. You're saying that you've got all these MBAs and you can figure all this stuff out, but dudes, if little old oil and gas folks are duping you. Now, if the oil and gas folks are lying and they're being fraudulent, and that's definitely happened at some points, I'm not denying that, then that's one thing. But if it's a simple thing of, oh, well, we didn't get the contract set up right and the guy used it for something we didn't think so, well, then, guys, come on. How many lawyers they got sitting around up there that are charging, $2,000 an hour?
Right. Yeah. No, that's exactly right. I mean, I think we could talk. Well, we could talk at length about this, and we could use specific examples. But maybe we've made the point. Maybe we can move on, because I think there's there's certainly the element of due diligence on both sides. I guess what I'm pointing to more so is that it seems as though in the oil and gas private equity space, the focus on profit delivered back to the investors has been secondary to where is our acreage and how pretty does it look on a map.
Right, and I think that goes between, yes, definitely some bad messaging for oil and gas, also not doing the due diligence from Wall Street. These PE guys, and I'm going to take a few shots here, they're promising, big time sexy returns. Okay, well, you promise big time sexy returns. Sometimes you actually got to do a little work and vet the deals. It's not as simple as sitting there and run the math. So I would just say, in general, Wall Street at the moment, I would agree with Joe Biden, and I would think of you as this.
You're a lying dog-faced pony soldier.
That would be, there you go, Wall Street. One more time, Nate.
You're a lying dog-faced pony soldier.
Bunch of lying dog-faced pony soldiers. So that's what I say to you, Wall Street, and you people who steal people's money. Why? Just give me your money. I'm not going to lie to you. Not about that, at least.
I mean, we're half joking, but let's just talk for like 2 seconds about, I'm going to use the word genius lightly, but let's talk about how genius the WeWork CEO was. Okay, so he starts this company. He quickly realizes that they're way over levered and there's no way it's going to come together. He brings in substantive equity from SoftBank. Then SoftBank pays him about $1.6 billion to vacate his stock and his seat. He gets to ride off in the sunset having made about $1.6 billion and just leave the bag for someone else to figure out. That is genius. I'm sorry. Like that is genius.
Oh, yes, bro.
Like, I mean, I'm sitting here scratching my head. I'm trying to pick up
right.
little fees here and there. And this
Right.
guy, ran a company into the ground and then was asked to leave with a balloon payment of 10 figures. Like,
Ask is putting it nicely, very nicely.
That's true too.
If by asked you mean he was escorted out of the building with a box, yes, he was asked to leave.
Hey man, well, if he's carrying one of those big checks that you get at like the golf tournament thing, it's okay.
Please fire me for $1.6 billion. Please.
Oh, anybody listening there, if you want to buy my business and then fire me for $1.6 billion,
we'll live stream it. We'll record it on the podcast, Instagram. We'll do it. We can get this thing going. So don't worry.
I'll even cut you a deal. I'll do it for 25% of that.
That's a little aggressive. Okay, Ben's cheaper than me. Sorry, I can't. I can't get it for 25%.
If someone comes up with a $400 million check, I don't see you turning it down. I don't know.
Put the check in front of me. And we'll talk because. Wait, is this $400 million cash or is this $400 million I got to report to the federal government? That's a big difference there.
You know what? I'm gonna put it in a series of Brinks trucks and just bring it to the office for you.
Oh, if it's cash, then yeah, I'm out. That's $800 million tax free. So yeah, Now we're at a 50% discount from what you originally said. Yeah, I'm getting the passport, heading down to a country with no extradition, and I'm going to go buy the presidency down there and never come back. So
not as though you've thought about this at all, right? I mean,
all off the top of my head, just thought of that. That's very.
You're in the process of getting multiple passports, and so we're tracking along we're tracking somewhere.
Speaking of that, do you think I should not go to Africa because of the coronavirus?
That's a little touch and go, man. I don't know. I mean, I don't.
Will you be concerned for my health?
Yes.
Oh, look at that. Do you have a life insurance? Do you have like one of those key man life insurance policies out on me, just in case?
I don't even have life insurance on myself, much less you. So no.
But see, you should get a key.
I got called about that today. Actually, I think I need to make maybe. I don't know. I mean, like policy for like 25 grand or something like that.
To cover burial. Just send me. Well, I mean, that's all 25 grand would do is like cover burial. I mean, that's it.
Yeah.
Yeah, I've got a little bit more than 25 grand on me, unfortunately, or fortunately, depends on who. Well, I mean, I won't get to collect it, so unfortunately.
Well, but you have people that depend on you. I just have 2 cats. I mean, that's pretty simple.
Why don't you go ahead and get a $5 million policy, roll it out, make me the beneficiary for half, just half. Me and Tom. If we
do a duel, I'm game. Let's go.
I've already got a $5 million on me. I can't do another one.
Because well, you can get another one, and that would really take another whole level to the truce that we have. I mean, that's like
even better, Ryan. name the cats as the beneficiaries,
And then the cats.
and then give yourself power of attorney.
Yeah, I
so
like
that.
Yeah.
You don't actually have to have
Yeah.
U.S. citizenship to administer their estate.
Well,
Why don't
I can make one of my cats POA over you. I can do that.
Yeah.
That sounds good.
Or just give me your Bitcoin information, and when you die, I'll make sure it always taken care of.
Okay, so one of my wallets, the code is
Yeah. He's cutting out technical difficulties. So, coronavirus, Ben, you're worried that I'm going to go over there and die, or what's your concern?
So, I will freely admit that as of current, I'm not really sure what I'm reading is true, what I'm reading is propaganda, what I'm reading is factually based, etc. So I don't know how severe I really think this issue is. All I would tell you is that the way it's being presented across the board is alarming in the sense that this seems to be a relatively generic disease in terms of symptoms, but has some serious teeth behind it. That we're seeing cases pop up literally worldwide. The massive travel bans or whatever. How much of this is, like I said, how much of this is propaganda based versus fact based? I really don't know. But I mean, I've been rethinking. Certainly not making any decisions. I need to see how this all plays out. But I mean, if this thing gets worse, you and I have a trip planned to Spain. I don't know how smart it is, because Spain is right next to Italy, right? Italy's one of the ones that seems to have some serious things going on. If this thing continues to spread, I don't know how smart it is. I mean, there was one just in in New York, and then I think California today. And so
You're more likely to get killed by the bull than coronavirus.
You say that, but is that actually accurate? I mean,
yes, the death rates on the coronavirus are really low.
So that's what I don't know, because we haven't. I don't think that this thing has been. I don't think it's been around enough for us really to know how much teeth there actually is to the virus. But I mean, so in terms of just like general numbers, obviously, just like the generic flu kills much more people worldwide. I mean, mosquitoes kill much more people worldwide on a yearly basis than the coronavirus will ever get to. But if this thing spreads and we're not able to find a effective cure, that's like, I don't know if you read the thing that Bill Gates put out, but he made his monthly whatever was about the coronavirus, and I tend to believe and give him more credence than I would normal media. And the way he was painting it was, hold on, the way you're mentioning to me, but the way he was painting it was that this is like a 100-year disease, like with some serious teeth. And I will freely admit, I'm not educated enough to know. I don't have all the facts. But you gave me some hand motion. What was that a few seconds
First
ago?
off, I resent that comment that you take Bill Gates more seriously than you do me. I take that very seriously.
I didn't say you.
Yeah, I'm part of the media. It's especially been in Russia. Big in Russia. Very big in Russia. Kazakhstan, huge. Okay? That's the first thing. Second thing is,
I don't
Bill
know if
Gates.
I don't know if Hunter Biden is on your donor list. I mean, like,
no,
sorry,
he's not. He's not. Okay, maybe he is. But still. But listen. Tell me, what does Bill Gates Foundation get money for?
What does Bill Gates Foundation get money for?
Yeah.
I mean, they do a number
disease,
of humanitarian,
medicine.
Yeah, all these things.
So,
water,
if you're Bill Gates and you said, "Hey, I wonder if I can raise a little money for my foundation," calling this thing a 100-year pandemic level global threat zombie apocalypse.
Do you see the look that I'm giving you through the camera? Like, really? I mean, I understand why you just said what you just said, but I really don't think that Bill Gates is in the position that he needs to be raising funds based out of fear. I don't buy that. I mean, I think he's got plenty of money. I think he's doing okay.
Oh, so he doesn't take donations in? Is that what you're saying?
That's not what I'm saying. What I'm saying is that
so if he takes donations, then he's incentivized to say things to get donations. I'll tell you what. Let's put a bet out now. This will not be a 100-year pandemic level like the Spanish flu of 1918. It will not reach Spanish flu of 1918. Let's put the wager on it now. I'm right. Bill Gates is wrong. Call my shot on March 2nd, 2020.
Well, Ryan, you're always right, regardless of facts. Let's just get that out of the way first.
No. It won't be Spanish flu. That's 100-year. The 100-year mark would be the Spanish flu of 1918. It will not be that bad. I'll put money on it right now.
I'm not gonna take the other side of that because number one, I don't even know what the metric would be. Number two, I don't know how you'd measure that.
We'll put it together for you.
Oh yeah, so I'm gonna trust your math on a deal that that's gonna work. Yeah, good luck.
The reality is that you don't trust Bill Gates as much as you said you did. Now you know your boy's coming in strong. You're like, oh, he's coming in strong. I don't blame you. When I come in strong, I get scared too. I would just say that
I don't trust anybody. It's not a Bill Gates thing, but yes, if you're asking me to verify what Bill Gates says and give him like my unquestioned loyalty and unbiased, then no, definitely not. But I mean, I believe him more than if George Soros were to say something.
Well, okay. There's orders of magnitude to this thing. Yes, okay. And I would believe Soros more than I would Bin Laden. Okay, so we're yes, I got you. We're on the same page. It's close. It's close.
If Bin Laden were to say something last or this week, I'd have some other questions.
Well, that's a fair point. That's a fair point.
Yeah.
That's a fair point. So no, overhyped. Not worried about it. Matter of fact, I've got to send my thing off to the embassy to get my visa to go to Gambia. So unless they tell me I can't come, I'm going.
So
the only concern I have is that I have small children, and they are susceptible to it. So that would be the concern. But for me personally, I'm not concerned.
It doesn't alarm you that at least optically it seems as though we're talking about a generic flu-like virus that is killing people at a pretty aggressive rate. I mean, it's not an aggressive mortality rate compared to the cases, but in terms of the number of people that are dying, and we have no path to a cure, and there's been no cure. We're not anywhere near curing this thing. It doesn't ping you that it might get substantially worse.
No, why would it?
Why would it not?
Swine flu, SARS, Ebola. We have between 12 and 61,000 people in America every year that die from the flu. I mean, the fact that this,
think about how quickly this thing has spread from, this is some non-event in China to, let me put it this way. When governments literally around the world start to act in unison and start to be alarmed about a disease like this, that's alarming to me. More so than just if this was just coming out of North Korea, China, and Russia, that's one thing. Okay, but if you have governments literally from the first world all the way to the destitute that are coming out with advisories and whatnot, very rarely do you see countries worldwide across the economic spectrum are unified on one thing, and they're unified on this. And so that to me at least is an indicator that maybe I need to be paying closer attention. Because it's so new that I don't think we know.
You need to be paying closer attention. I agree with that. I don't disagree with that. I mean, I would think that if you talk about unifications of government, then government unifies to always clamp down power over people. So yeah, I would definitely be watching. I just don't think for the same reason that you're thinking.
Has it been an hour yet?
No, but we can cut it off. I'm willing to put a little wager down. You make the terms. I'll put the wager down.
If I may suggest something.
Nate, the voice of reason.
The Spanish flu had an infection rate of 33%.
Of the world population.
Worldwide, yeah. It infected 500 million people.
Okay, hold on time. Let's just start this. This is 1918.
1918.
So commercial air flights weren't a thing. We hadn't gone to the moon.
Yeah.
So travel was far more restricted. So keep that in mind. So it's harder to spread is all I'm trying to say. In 1918.
Keep in mind that travel was elevated at that time because there were a lot of soldiers going out of Europe.
Sure, but it's not like the travel today where anyone can get on a plane anywhere.
True. But
33% of the world population.
So 500 million people, 33% of the world population. About 10% of the people who were infected died. Okay. So 3% of the world population was killed. So
I'll take under 3% of the world population dies from coronavirus.
10% mortality rate, 33% of the world population infected.
I mean, if we're really going to normalize it, I think you have to normalize it less than that because 3% of the world population died when vaccines of any kind were barely a thing, if not maybe not a thing, and so they were significantly more under the gun than today. So I think if you were to give me less than 1% of the human population, I might take that.
Well, of course, less than 1% is going to die. That's a given.
Yeah, less than 1% has already
But
died.
yeah, because 1% already died. Less than 1% already died.
No, yeah.
Now,
yeah.
if
I
we
didn't
if
say
we
that.
want to
Like,
if we want to use
one-
the
at least 1% is what I meant. Like 1% being the bottom.
1%.
we could also use the absolute numbers and just say if 50 million people die, then
What's
50 million.
one-
That's actually in your favor. 50 million people died. That's in your favor because there's more people today than there was back then.
yeah,
50 million people. And over how long? A year?
over the course of a year, yeah. So 50 million people before the spring of 2021.
I'm down for all your Bitcoin. Your Bitcoin versus my Bitcoin, head to head.
15 million.
50 million. 50
50.
million.
That's prorated.
My counter proposal to you, because the 50, I don't know. Like, number one, 50% that's 1.5% of the population, and so my calculation to you is if more than 15 million people. Why are you shaking your head?
50 million is not 1.5% of the population.
Is it not?
70
Sure.
70 million people would be
Worldwide,
1%
No.
of the worldwide population. If it's 7 billion, if you assume a baseline of 7 billion people.
Oh yeah, I was doing my math on 3.5 billion. What am I doing?
I don't know. You're counting China only. You're discriminating.
Sure enough. If how many people have died thus far? Do we have that number?
3,000, 5,000, something like
Yeah, less than 4,000. Hang on, I've
And
got
many,
these
and
statistics
out
right
of how
here.
many cases? Do we know that number?
that. 90,000?
90,257 as of today.
Yeah. So okay. So if you want to make a
Here it
bet,
is.
like, we can make it realistic. My number is 12.5 million people inside of 18 months.
But see, that's not as bad as what Gates is talking about. So that's why he would be wrong. That's my point. That's my whole point. If I don't want to do that because that means that I'm right. Like I'm right by taking that bet to begin with. You would have to hit 50 million something odd people die. That would actually be prorated for your vaccination argument more or less. Because there's more people today than there was. How many people were there in 1918?
Worldwide population was barely
No,
over 1 billion.
What I'm getting at is that I think even if, and we're getting into the weeds here, but I think even if it was a 100-year event and it had the mortality rate potential of a 100-year event, I think that our medical, whatever you want to call it, is up to snuff enough that it would be able to save some of that population. And so, if you like, in other words, if we had,
I agree.
I guess what I'm saying is, if we had COVID-19 back in 1818, I think it easily would have killed more people, if not the same. But since we're in today, I think you have to normalize it back to how far we are in medical. So
what I'm saying is there was 1 billion people in 1918.
Between 1.5 and 2 billion.
So
people.
we've got 3 times as many people, over 3 times as many people today, and I'm still giving you 50 million. So the number back then, if you multiply it times 3, would be 150 million people would have died. I'm still giving you 50 million and still calling that a victory. So so you should multiply the deaths by 3. I am normalizing it.
If I don't, yes, okay. If we're qualifying a 100-year event, of this nature, of 50 million people or over, I will take any odds of any listener that wants to listen. I'll take any odds that we will never have an event like that in the rest of human history. So if you want odds, call me, because that's unrealistic. There's just no way. I mean,
Gates is lying. Thank you. We've agreed.
No. What I'm saying is that his definition of a 100-year event is substantively different than the mortality rate being comparative to the plague or whatever.
But here I know. So let me just say that if you're right on that, let's just get the benefit of the doubt. The problem is when you say that, people go 100-year event. What happened the last 100 years? And they go look at the Spanish flu and they do the math that I just did. They go, oh my God, 150 million people are gonna die.
We're all gonna die.
And then Bill Gates like, no, it's like 6 million, bro. It's like, oh, 6 million people? That's nothing. That's insignificant. Worldwide. So that would be my whole point.
0.1% of the world population.
Again, so thank you. This is a great way.
I won't make any correlation to you saying that 6 million people dying is irrelevant. There's nothing else in history that I'd like to point to. Like, we can keep. We can keep going.
Wow.
Just call it like I see it, Ryan.
Wow. Cue the dog face line pony boy there, 'cause that's brutal. That's brutal.
I'm sorry, what was that, Ryan?
I'm not nothing.
Did you
You're a lying dog-faced pony soldier.
Yeah. Okay. Ben, where will you be this week?
I'm in Midland this week. Midland next week. Coming up, actually, in a couple weeks, I believe it is March 31st and April 1st. There's an oil field water seminar in Houston. I'll be giving a talk the first day of that. And so if you're in Houston for those, I'd love to see you. Let's see what else. I'm going to Dallas actually. I haven't locked up dates yet, but I'm going to be in Dallas at either the middle of next week or the week after.
Oh, wow, thanks for letting me know. Appreciate that.
I'll be putting something on LinkedIn.
Yeah.
Since I haven't actually figured out the dates yet.
This is the first I'm hearing of it, so
about it yet.
Yeah, wow.
Well, since I haven't found the dates yet, I haven't told. Thank you for that. But if you would like to meet with Ryan while I'm there, reach out to me.
I won't be here next week. I gotta meet with an ambassador down in Houston. Sorry.
Unbelievable. Well, so that's why I didn't tell you, because I didn't think you'd have time for me anyways. I'll just call Jay and we can talk about Oak Tree. It'll be okay.
Oh God, I might cancel for that now. That's pretty good stuff. That's pretty good stuff.
I'm gonna get him a couple of drinks deep. I'm gonna get the real story. It's gonna be great. I might press record on the phone like while we're talking, just to
That would be wonderful.
Just bring me along with you. You won't even need to.
Yeah, there you go. All right, well, I'll be Texas Long Gas Podcast, Energy Week Podcast, and I'm actually going to Houston tomorrow, so be back on Wednesday.
Thanks for telling me. So I'll throw it back.
You're in Midland, dude. You're in Midland. You don't live in Houston.
I could have been in Houston.
And we'll be back next week. Yeah, thank you. Have a good week.
Oh, is that it? Are we calling
That's it.
it?
We're wrapping it. We're having to cut the tape.